Hi everyone, and thanks for joining us today. Welcome to this portfolio construction webinar brought to you by Netwealth. My name is Liam and I'm part of the Netwealth marketing team, and I am delighted to be joined today by Dr Stuart Palmer from Australian Ethical Investments. It's pleasing to see that responsible investing has continued to grow in popularity, but with all these new options entering the market for investors, it can be challenging finding the right investment that matches your values, which is why we have Stuart Palmer in here today to be discussing how to go about that. So just before we jump into his presentation, I will run through some housekeeping items. So this webinar is being recorded, and a copy of the slides and video will be emailed to you within a week of today. On the taskbar to your right, you will notice there is a questions section. We encourage you to type any questions you would like answered by Dr. Palmer, and we will try to get through as many as he can after this presentation. And if you would like to share anything with the social world about today's presentation, please include hashtag NetwealthInvest or @NetwealthInvest. As always, the information presented today is general advice only and is not intended to be a substitute for personal financial advice and has not taken into account your personal circumstances. So introducing today's speaker, we are thrilled to have Dr. Stuart Palmer with us today. He is Head of Ethics Research at Australia Ethical Investment, which is Australia's leading ethical superannuation fund and investment manager. Stuart evaluates the impacts of companies' products, services and operations on people, animals and the environment to assess and encourage alignment with the Australian Ethical Charter. So I won't take up any more of your time and I'll hand it over to you, Stuart.
Thank you very much, Liam. Very happy to be here. Thanks for having us along. So I'm going to talk about responsible investing, ethical investing, sustainable investing, ESG investing. There's lots of terms that people use in this space. They do pick up some important differences within the space, although I guess a warning is that as you read more broadly and about the topic, you will find these terms used quite often in different ways. So it's a growing area. There's a lot of jargon. So I guess what I'm going to hope to do this afternoon is to help you navigate this area. The broad term I'll use for investing ethically, sustainably is responsible investing, and broadly that's going to be, I'm going to define that as investing which looks beyond the very important financial aspects of investing, so it doesn't lose sight of that obviously, but also looks at impacts that investing has on the planet, on people, animals and the environment. So to get things going, just a quick snapshot of what's been happening in this space in terms of the growing interest that we're seeing. Overwhelmingly, when asked, Australians are saying that responsible, ethical, sustainable investment is important to them. Often people talk about millennials being a driver for this. I know that's a broad category, but basically people coming of age, if you like, turning 18 around the turn of the century, and then sort of a decade or so after that. So high percentages of millennials being very switched on to making choices which align with their values. Now, whether that's in terms of the jobs that they do, the products and services they buy, but increasingly also what they're doing with their investment dollars. But it's not just a generational millennial phenomenon. If you look at that first statistic there, 92% of Australians saying that they expect to invest responsibly and ethically. So these are high numbers, particularly compared with historical numbers. We see just a general greater awareness of the choices that people have with their investment dollars, particularly in the area of sustainable investment. Historically, there has been and continues to be to some extent a high level of disengagement really with investment, particularly with superannuation, which people see as somewhat remote to their day-to-day financial needs, given the way it's locked up. But we see that we see that changing dramatically. Now, it is one thing to look at surveys to ask people what they will do or would do with their money. It's another thing to measure what they actually do. So we are seeing those survey responses and attitudes translating into action. So this is a global picture of recent growth in responsible investing. So over the last 2 or 3 years, we're seeing a doubling of funds invested responsibly. That's both, that's in percentage terms of total dollars invested, slightly less than a doubling in terms of absolute dollar terms. So it's a global phenomenon. Australia there is a thin sliver of those columns. Let's look at the Australian experience in more detail. This is responsible investing as tracked by the Responsible Investment Association of Australasia, who survey the industry annually, and they categorise the responsible investing sector in different ways, and we'll get into a little bit of the detail of that. But this graph tracks the growth of what they call core responsible investing. So this includes ethical investing, but also what they call sustainability themed investing, and also impact investing. And I'm going to unpack those terms a little bit shortly, but there we're seeing over sort of 3-year periods going back to the beginning of the decade, core responsible investing dollars just about doubling every 3 years. So one of the things that we think is important in driving this growth is not just the greater awareness of the choice, but I guess people seeing that there are these great challenges which face us in the world today. Now, whether that's climate change, whether that's changing aging demographics, we see that there are a range of important challenges that we're going to need to address, and there's a growing realisation that government on its own is not going to solve these problems. So people are thinking about, well, what's the role of private capital, of business, to help solve these problems? So this table shows key themes identified by august organisations like CSIRO, KPMG, PwC, trying to pick out the global megatrends which they think are going to drive demand in the future, given these significant social and environmental changes which are occurring at the moment. And it's interesting to note the alignment between the things they pick out. I mean, there's a few things I'll mention. There's a lot to absorb there, but the demographics I've mentioned, technology they pick out. Obviously, technological disruption is something we're seeing across many different industry sectors. So they see as a continuing theme. The other one I mentioned is consumer power, the role of the conscious consumer. And I think this is interesting in the responsible investment space because it makes very clearly, or brings to the surface very clearly the connection between investing responsibly, responsible business, and financial outcomes. Consumers ultimately will, with their dollars, drive change. So if we've seen that, I guess, most recently with a lot of the publicity around AMP, that's the missteps it's made in its financial advice business as revealed at the Banking Royal Commission, and we've seen the deep concerns that people have about the financial impact of that on their business going forward, as reflected in their share price. So people are seeing these global challenges both as something that we need to step up to address, but also as creating significant opportunities, significant investment opportunities. And on this slide, we're just looking at a number of different ways in which ethical investment portfolios can take advantage of some of these trends, both for financial benefit, but obviously also for the purpose of meeting some of these global challenges. So if we're thinking about aging demographics, obviously we're going to need significant new capital directed towards aged care, new medical solutions, health and wellbeing generally. On the environmental front, if we're thinking about climate change, then obviously we need lots of additional capital going into renewables. But also I was at a clean energy metals conference yesterday, looking at increasing demand for metals like lithium, like cobalt, which are going to be so important for batteries, and that's going to be for storage, utility energy storage for the electricity that comes out of your power point, but also for batteries for electric vehicles. Some of the projections of the growth and take-up of electric vehicles are quite staggering. So far, I guess I've spoken just broadly about responsible investing. Now I want to sort of get down into the detail of some of the different types of responsible investing. Just as when you're thinking about the financial characteristics of investments, there's any number of different things that you're going to look at from in terms of asset class, different risk-return characteristics. When you're thinking about responsible investing, it's a very broad category. So here's a way of thinking about it. We've got traditional investing, which is purely focused on financial returns. Within that, we've got what we've called there, or the Responsible Investment Association has called broad responsible investment. That is investment which thinks carefully about environmental and social impacts, but is still processing those impacts, taking them into account in their financial evaluation of investments. It's quite often called ESG integration. I'll talk a little bit further about that in a moment. And then a subset of that is what RIA, the Responsible Investment Association, calls core responsible investment. So that's ethical investment, impact investment, and sustainability themed investment, which I'll unpack a little bit further now. And the way into it is, I think it's helpful to think, when we're thinking about investing, there's a whole lot of different tools that investors have to affect change. And here's 6 of them. And it's important when you're thinking about responsible investing, thinking about, well, which of these tools are important to me? And when I'm looking at a responsible investment, which of those tools is that investment manager, is that fund, or indeed is that company using to try and achieve positive change? So the first 3 I'm going to delve into shortly. That's ESG integration, negative screening, and positive screening. The ones I want to focus on just now are the 4th and 5th ones as we go around the circle: influence companies and influence government. So as well as having an impact by virtue of deciding what they will and won't invest in, investors have a really distinctive and powerful voice to influence both companies and government. Because they're long-term investors, they're very much evidence-based, they have a very credible and powerful voice with companies and with governments. So we think it's really important as a responsible investor, as an ethical investor, that we use that power and use that credibility in a positive way. So when we're invested in a company, we've screened it as being an ethical company, but that doesn't mean by any means that we've assessed that it's a perfect company. Invariably, there'll be areas that we think they can do a better job of managing their environmental and their social impacts. So we'll seek to exercise a positive influence with them. Now, in the food sector, for example, that might be anything from encouraging more efficient water usage, better, more sustainable use of fertilisers, alternative sources of protein, so looking at diversifying into more plant-based protein, which has lower greenhouse gas emissions, obviously raises less animal welfare concerns if we can meet more of our protein needs from plant-based protein rather than relying so heavily on animal protein. And government influence as well, we think, is very powerful. We can influence government directly. We respond regularly, putting in submissions to government on different issues around energy policy, climate policy. But also, we think directly by our investment voice, we can influence, the quality of the public debate. We can encourage a better informed, we think, debate about some of the issues which are often debated in a very divisive way. We think investors taking a long-term balanced view. We invest right across the economy. So we've got an important voice that we think it's important for us to play that role in public debate. And the last point there on this slide, impact for sustainable development goals. Impact investing is well, the term is used as a broad term sometimes, but more recently it's a more specific term for investing which is addressing deep-seated challenges in the economy, in society. So the Sustainable Development Goals were announced a couple of years ago by countries globally, identifying 17 areas where there were huge unmet needs globally, ranging from poverty to emissions reduction for the purpose of dealing with climate change, maintaining sustainable oceans and fisheries and so on. So impact investment is sort of investment which is directed at meeting some of those long-standing imported problems which are really intractable problems. So over a long period, governments and business haven't been able to solve them. So why this is such an interesting area is it's really, rather than being about business as usual and just continuing to operate in the way we've tended to operate, and just at the edges try to do it a bit more sustainably. This is trying to come up with new business models, new investment opportunities to actually meet these deep challenges faced by the world. So let me now come back to the difference between ESG integration and what we call ethical investing. So one way to think about it is to think about the choice between investing in clean, renewable energy versus investing in fossil fuels. So we, as an ethical investor, screen out fossil fuels. We do not invest in fossil fuels because we think continued investment in them is inconsistent with the urgent changes we need to reduce emissions and limit warming to well below 2 degrees. Alongside that, we recognise we need to shift capital to clean energy, renewable energy, battery storage, so we positively seek that out. A fund which is adopting a purely ESG integration approach might end up with the same result, but they might not as well. So an ESG that stands for environmental, social and governance. So an ESG investor is going to take into account those environmental and social factors and the quality of a company's governance in their financial assessment of a company or a sector. So they may well say, given the global challenges we face, given the commitments that governments have made to reduce emissions, it doesn't make financial sense to invest in fossil fuels. It's too risky. And they might see great opportunities to invest in renewables, given those global trends. But at the end of the day, it's still a financial decision. So if they see value, if fossil fuel company prices fall sufficiently to a level that they think they represent good financial value, then they can still invest in those sectors which an ethical fund will generally screen out. So that's the difference. It's a bit nuanced. I mean, one way of thinking about it is the ethical investor is proactively saying, okay, we want to proactively shape the future. We think we need more renewables, less fossil fuels, so we're going to invest to achieve that end. Whereas an ESG approach tends to be more reactive, sort of more ethically passive, if you like. It's sort of saying, well, what's happening in the world? What do I think represents good value at this point in time? I might invest anyway after I've taken into account these environmental and social considerations. So just to expand a little bit on the approach of an ethical investment fund, which does screen, there's two distinctive types of screening, generally referred to as positive screening and negative screening. So on the positive side, where an ethical fund like us will say we're not going to invest unless we see some positive impact in the companies and sectors that we're choosing to invest in. So here's some examples of some positive parts of the economy that we see available for investment. The flip side is what we will avoid, what we will negatively screen out. And again, here, a range of the things that we screen out. And I guess looking at the range of things screened out there and also going back to the range of things screened in, there's no real consistency around what gets screened in and what gets screened out across funds. I mean, we have an ethical charter which 23 principles of the things we support, the harms we avoid. So that's guided us in our ethical assessments for the past 30 years, and that's led us to these sorts of inclusions and exclusions. But different funds will have different exclusions. You might find an ethical ETF, there are a number of them, which have very narrow exclusions. So some of them might exclude tobacco, they might exclude cluster munitions, but beyond that, they're basically investing in across the market. So the result of that is portfolios that are actually quite close to mainstream indices, whereas a much more heavily screened approach like ours delivers investment portfolios which are quite different to just investing in the index or a mainstream equities or fixed income fund. So that's something to bear in mind when you're thinking about responsible investment, is to pay attention to, okay, what's the degree of screening involved. So yeah, if you are thinking about responsible investment, let me try and say a few things about some things you need to pay attention to try and navigate the landscape of responsible investing and identify a fund which is aligned with what you're trying to achieve, aligned with your own values. I guess the first general warning is beware sort of relying too much on the label that this is an ethical fund or a sustainable fund. Volkswagen, before they got pulled up for cheating on emission standards in their diesel vehicles, used to talk a lot about having really clean diesel. So it's really important to look beyond the label of investment products to see what's the detailed disclosure that the particular company or fund provides about their ethical or responsible investing process. So what factors do they take into account in deciding what they will and won't invest in? What other tools do they use to try and influence change? Do they engage with companies? Do they engage with government? And then also to try and look at their actual portfolio and see what are the actual outcomes. What does the portfolio look like, and what impact is it having? And I'll come back to that in a second. But the second component of what it's really important for you to think about is what's important to you. So we find our members and investors come to us for a really wide range of reasons. Many of them will have specific ethical passions. And here's a graph just based on some annual research, survey research that we do, just asking people to rank the most important ethical issues for them. And we can see climate change, and this has been a theme in recent years, is overwhelmingly a really significant issue for many of our members. So think about what's important to you, and then when you're looking at a fund, see how that lines up with their approach to, for example, screening their investments. What do they positively screen in? What do they negatively exclude from their investment portfolios? I mean, what we find is that because our approach is what we call holistic under our ethical charter, which I've mentioned, we're thinking about, we're worrying about impacts on people, on animals, and the environment. We might balance impacts on those things differently to what some of our members would like. So if we have a member whose key issue is animal welfare, then they might prefer us to be doing more to advance animal welfare in the healthcare space, for example. So we have a balancing approach when we invest in healthcare. We do invest in some medical research which uses animals for that purpose. If it's medical research which is trying to solve significant health issues facing humans, then there's a trade-off there that we balance between harm to animals in the research process and benefits to humans. But we do have conditions around that, around needing to see commitment from companies to reducing their use of animals, to finding alternatives to use of animals, alternatives, non-animal forms of research, and we engage heavily with companies on that to explore those alternatives. So that's an example where a specific investor might disagree with our particular choice on a particular investment. So what we're trying to establish is a I guess, a level of trust that we are genuinely applying our ethical charter in a rigorous evidence-based way, where we're balancing the interests of people, animals, and the environment, and that includes current versus future generations, so that even if they don't agree with every company we invest in, every choice we make, we develop a level of trust in the rigour that we bring to that process. In the same way, obviously, that people want to have a level of trust in the rigour we bring to the financial analysis that we do. I guess just building on that holistic approach that we take. I mean, this is a diagram I'll let you digest, but Kate Raworth has coined this term donut economics, and we think it's a really helpful way of thinking about what we need to do to develop a sustainable economy and society. So it's saying that economics, the future of economics, needs to recognise that a thriving economy has two basic conditions. One of it is a social foundation, which is captured in the middle there. Things like good education system, equality of opportunity. That sort of cohesive society is essential for any thriving economy. Equally, the boundary conditions, the outside of the donut, are the environmental limitations that we face, whether that's the amount of greenhouse gas emissions that we can put into the air without having extreme global warming, whether it's fresh water availability. So taking into account all those sorts of factors, we're aiming to invest within the donut. So that sort of frames, if you like, our philosophical approach. But how do you test whether we or others are actually achieving that? I mentioned the Sustainable Development Goals. Now, increasingly, you'll see a lot of responsible funds try to link the impact that their investments are having to these development goals. So I mentioned these are some of the biggest global challenges that we face that have been identified by the UN. So the question arises: okay, how is my investment dollar? I want to invest in to meet some of these challenges, whether it's climate, health and well-being, sustainable fisheries. How do I know if my investment dollar is achieving that? Well, one way we try to show the impact that investment in our fund is having is actually looking at from the dollars, if you like, the revenue that is earned by the companies that you invest in through our funds. How much of that revenue is coming from companies who are producing products and services going towards meeting those goals? So that this table is taken from our annual sustainability reporting. If we look at the column fourth in alternative energy, that's showing you that for every $1 million invested, there's about $12,500 worth of revenue earned by these renewable companies listed to generate clean, low emissions energy, wind, geothermal, solar, hydroelectricity. So that gives you a bit of a picture of the ways in which investment in our funds has that positive impact. We also benchmark against that. Well, how does that look like an investment just in, for example, the Australian share market index and the global index that we use as a benchmark? And we compare our impact with the impact of just an investment in those broad indices. So there's about 2.2 times positive impact by this measure that we achieve through our funds compared to just investing in the mainstream funds. So over double, which we think, is an important way of just checking, okay, we're applying our ethical charter to individual companies, but what does that look like at a portfolio level in terms of the impact that we're having? Another way that you can look at funds is, so you read the responsible investment statement about the sorts of things that the investment manager is going to take into account in their investment process. It's really important to see, well, what impact does that have in the makeup of their portfolios? So this diagram just captures the differences between our equities portfolios and the index. So you'll see under allocations, for example, to financials compared to the index, significant over allocations to information technology, healthcare, and utilities. Utilities, that's where most of our renewable investments sit. We're low on energy. That's because the energy sector is mostly captures a lot of fossil fuel companies, and we don't invest in fossil fuel companies. So another way to check, reality check, what difference is my investment dollar making by investing in this or that responsible investment option. I should say something about the financial. Obviously, yeah, this webinar we're talking about different types of responsible investments. I'm focusing on the environmental and social impacts. Obviously, you and certainly our investors are going to be also interested on how funds are delivering on financial objectives in terms of delivering financial well-being, performance, security, and there has been this what's been termed the ethical investment myth, that surely there must be some sort of trade-off between paying attention to the environmental and the social, some financial trade-off, some financial downside. That's not been our experience. This is our long-term, long-run performance of our flagship ethical investment share and investment fund. And I mean, if you think about it, if ethical investing is directing you towards sectors with long-term growth prospects, trying to keep you out of ones which face headwinds, whether they be increasing government regulation or customer backlash against unsustainable practices, then you can see how that alignment between the ethical and the financial can naturally exist. Listen, let me just briefly talk to this slide. This gives you a broader picture of responsible investment performance as researched by the Responsible Investment Association I've referred to before. They look at this core responsible fund category and look at the performance of those funds compared to mainstream funds, compared to indices. So first thing to note is in 1 year performance, it hasn't been a great story for core responsible investment. Now, obviously, those numbers are going to bounce around, as you would know, shorter term performance. When you're looking at equities investments, multi-sector investments, there's going to be shorter term volatility. But if you look at the story in the longer term, those 3, 5 and 10 year periods, in international shares, we're seeing in the 3 and 10 year periods core responsible investment outperforming, and then 3, 5 and 10 year periods in the Australian share funds and the multi-sector growth funds, we're seeing responsible investment outperforming. So it's a positive story, and it certainly, we think, debugs any myth that there's a trade-off involved if you're looking to explore responsible investing. So I just want to finish up with a couple of things that we're particularly passionate about at Australian Ethical. The investment process is obviously core, what we will and won't invest in, making sure that's a rigorous process and fully integrated with our financial investment analysis. But alongside that, actually being a strong public voice for positive change, we recognise that alongside private capital, governments need to create regulatory frameworks and policies which help create a better future, whether that's around climate change, whether that's around modern slavery, forced labour, which still tragically exists in many supply chains of many Australian companies, whether it's around live export, so a very live issue at the moment with recent tragic footage of great harm being caused to our exports of sheep to the Middle East. So calling for an end to that trade and a transition to 100% exports of processed refrigerated meat. So they're the sorts of that's the sort of work which we think it's really important for investors to be involved in, because we bring that credible long-term empirically based perspective to public advocacy. We also recognise and think it's really important to understand that for-profit enterprise business, powerful as it is, won't achieve everything. We need to nurture and support the not-for-profit space. So 10% of our profits are donated each year to worthy not-for-profit purposes, either directly through grants or through our foundation. And we think that's a really important way that we can support that sector and social enterprises. And the last thing I want to mention, which is a great area of passion for us, is just being open about our process and what we think about important issues. If you go to our website, you'll see a list of all the companies we invest in. You'll see an explanation of what our position is on different things, whether it's animal welfare, nuclear power, clean energy, and so on. Many other, I think about 50 topics currently on the website, so you can just see a little bit of brief snapshot of what we think the key ethical issues are of investing or not investing in those sectors and the investment approach we take to them. We think that's important so that people have a fully informed view of the impacts that we're having and the way we think about ethical investing. And we're extremely happy to see that it's something that's of great interest to our members. Superannuation investment more generally is generally a pretty low engagement category, but that slide just shows the level of followers we have on our Facebook page, compares it to followers for some other funds, just to give you an idea of the interest that people have in responsible investing. But actually our social media channels are about a lot more than responsible investment. It's about just what's happening in society and the economy generally, which is going to potentially solve some of these great challenges that we face. So I thought we might finish up there, Liam, if that's all right.
Yeah, thanks, Stuart. Thanks for coming in and discussing that very important subject with us. Listeners, we hope you found that valuable and have been able to get some great insights into what to look into when looking into responsible investing, for finding an option that matches your needs and what you care about, and helping the planet, we only have one, and growing your wealth at the same time, which sounds pretty good to me. We'll just jump into some questions now. Now, a reminder, listeners, we encourage you to continue sending them in for Stuart. Again, on your taskbar to the right, you'll notice there's a questions panel. Please type them in, and I'm sure Stuart will be happy to answer as many as he can. So, Stuart, we'll start off here with one from Murdo. So, you mentioned the greenwashing before in your presentation. Now, he's asked, is there a risk that these companies promoting their greenwashing when they could obviously not be right? Is there a risk that they could undermine the credibility and effectiveness of responsible investing?
Yeah, no, I think that is right. It's a real risk as consumer investor demand grows for responsible investment product. Which is a great thing. It's also a great thing that we're getting a large number of institutions, existing institutions and new institutions coming into the responsible investment space. So that's good. There's more product, there's more choice, there's more capital ultimately flowing towards good things if it works right. But you're correct. If some of that product is really just more a marketing label and a marketing campaign without the underlying rigor around ensuring that investment dollars are actually going into companies having a positive impact, then there's a real risk that people become cynical about it, that they think, one, that real impact is not being achieved, and also obviously if there's not the financial rigor around it, if we have losses from some poorly thought out financial decisions, then that also poses great risks. So I guess part of this webinar is trying to get investors as critical consumers of the marketing information being put out by some of these product providers.
Yeah, sure. We've also got another question here come through from John. He's asking if you wouldn't mind expanding on the pros and cons of ESG ETFs versus ESG funds.
Yeah, so I mean, in principle, and just focusing on the ethical, responsible investment aspects of those choices, we wouldn't see like there's any particular reason why an listed ETF is going to be more or less effective investing responsibly than a fund. It's really in the detail of their respective responsible investment policies. So again, it's going to be, what do they screen in, what do they screen out? Are they involved in advocacy and engagement with companies and governments? What resourcing do they have to actually undertake the ethical research and integrate that with the investment analysis? I guess, so that's in principle. I guess in practice what we've tended to see, and I guess this is not surprising, ETFs tend to be sort of more passive style funds, which tend to more closely track indices. So what we tend to have seen is that they'll have more limited screening, pick a couple of exclusions, and then that allows them obviously more efficiently to offer those products in line with their other more mainstream products. So I guess the question, when looking at them, is obviously just to say, well, what are the exclusions? What are the inclusions? And is that what I want out of a fund or not? Am I looking for more?
Yeah, hope that answers your question there, John. Question from Kirsty now. What would you say are some of the fastest growing sectors in responsible investing?
So in terms of where the money's going, I think, I mentioned a few of them, and let me think of some other ones. So renewable, so anything which is reducing emissions. So I've mentioned renewable energy, I've mentioned battery storage. I guess some others around that theme are energy efficiency. So technologies which allow us to just use less electricity to produce the same energy output. That's a key focus area for us, and a growing area. Beyond the energy sector, and we think this is really interesting and important. There's been all this focus in Australia, quite rightly so, on the energy sector, but of course there are massive other sectors which contribute to our emissions, whether it's agriculture, buildings, transport. So in the transport sector, obviously electric vehicles, but also public transport, rail, and so on. In the agricultural sector, and that can be a tricky one in the investment space, particularly if you're looking at listed investments. But we think there will be, and we are seeing a lot of change there, both in terms of looking at alternative agricultural practices which are less emissions intensive. I've mentioned moving away from animal protein towards alternative sources of protein from plants, and also alternative land uses. If we can, CSIRO has done some really interesting research on this, increase the efficiency of our food productivity. That frees up land for alternative uses, such as forestry, which is going to be really important to drag carbon out of the atmosphere to help address climate change. So I'm moving away from climate, I guess, healthcare, information technology, a really interesting area, artificial intelligence, robotics. I don't know, you hear it in my voice, a bit of hesitancy. That's one of the really key areas for us to look at ethically. Obviously, there's great benefits to be gained from having, the more mundane, dangerous jobs done by robots using artificial intelligence. But obviously, there are those social issues about, well, where are the replacement jobs coming from? So that's a really interesting area that we're looking at.
And is any sort of companies of note that are really taking significant steps to try and be more ethical? Or?
There are. I mean, we and what's really pleasing is that whereas in the past in the particular sector there might have been sort of one company sort of pushing the sustainability barrow, is that seems to have driven a whole lot of competition within sectors to assume that mantle. So, I mean, in the global food space, Unilever, Paul Polman has been, a very public voice for the importance of sustainable sustainable sourcing of the ingredients for their products, working with people like the World Wildlife Fund. But other major companies in that sector, Nestle and others, we're seeing a great deal of competition between them in that space. Now, you can still debate whether they're doing anything like enough, and if you look across their product range, there's plenty of areas of concern that you would find, but the trend is in the right direction.
Cool. And the hot topic right now is, of course, the Royal Commission with the banks and the fallout from that. Also, I guess, sort of semi-related is Facebook and the privacy issues that have come of light from that. Well, I guess, what's Australian Ethical's view on that? How does that impact your decision making and so forth? Can you expand on that, please?
Sure. So just in terms of our process, we screen a company in. That doesn't mean they're in there screened in forever. We have ongoing monitoring and checking of alignment of the companies we invest in against our ethical charter. Facebook is a really interesting example and a really complicated case. We had the Cambridge Analytica scandal. We had a flurry of activity and announcements by Facebook, testimony by Zuckerberg before the US Congress and Senate. So that sort of information we take into account. So we invested in Facebook for the first time a couple of years ago, took a view on social media, took a view on Facebook in particular. So we've crunched all that additional information and we continue to invest in Facebook. So we've made a positive decision to maintain our investment in Facebook. And there's a lot of complexity around that. Obviously, I mean, broadly, social media, is like many new technologies, can be a force for good, force for bad. On balance, we think it can be a sustainable tool for lots of really positive things. So that's why we continue invested in Facebook at this time. Moving to the Royal Commission, any number of companies, household names, turning up to the Royal Commission and telling tragic stories around the way their customers have been let down by them. So absolutely that sort of information, to the extent we invest in those companies, and we're a selective investor in the financial services sector, applying our ethical charter historically, we've excluded a lot of that sector. You might recall on that graph, we're underweight the financial services sector, but some of the companies we do invest in, 2 out of the big 4 banks. We did invest in AMP. Obviously, there's been a lot of focus on them, some new evidence that came to light through the Royal Commission, which caused us to carefully review our investment in them. We looked at AMP's response to that information, the changes that we're making, applying our charter. We concluded that we couldn't stay invested in them, so we divested from them as recently as last week, actually. Royal Commission will continue, I'm sure, to throw up lots of new interesting information, which we'll continue to monitor.
Yeah, sure. No, definitely. It's definitely not the end of the road for that yet. I have another question here from Lee, if you don't mind. He says, in order to evaluate product providers, does RIA provide some level of analysis according to some of the attributes identified in the sessions?
So it does. That's a good point. I should have mentioned there. They do. So responsible returns, oneword.com.au, is sort of a site which is created by Responsible Investment Association to help you do just that. So it includes some important information about screening, about the responsible investment approach of a wide range of responsible funds.
Great. I think we might wrap it up there. Stuart, thank you again for presenting today. Listeners, thank you for joining us. And a reminder that Australian Ethical's funds can be found on the Netwealth platform. Just go to the Compare Funds and Models page on our website and you will see the options available for you. Thanks once again for joining us. We hope to see you next month and have a great day. Thank you.